Welcome to Bears in Exile. Today is Monday, March 12th, and this is the market overview looking at the Dow, SPX, VIX, TNA, UUP, FXC, GLD, SLV, XOY, XLF, GE, Apple, and the NASDAQ. Sounds good. Okay. Well, there was nothing truly special about the Dow today. It's taken 4 days to equal this single red bar, and so probably wondering, well, where's the next red bar? Well, there just isn't one yet. So what clues do we have to look for? Well, we reached the upper price consensus level today and backed away from it slightly. We have the 14-day RSI moving average still ticking down slowly, excuse me. But beyond that, everything else was doing pretty darn good today. CCI up, stochastics up, RSI up, histogram up, and the MACD going sideways. What can you say other than the bulls have been doing a very good job at bouncing off of the long-term bar? I mean, there's just nothing else to say. We still have some room to go before the previous peak, and while many people are subscribing to the idea of 13K, once you bust the previous top, it's going to be a straight run to 14K, and it's a new bull market. I just don't really believe in that at the moment. But what can you argue with when you have 4 green days in a row and they only equal up to 1? I think the answer is we need to have another red and see what it does. See if it becomes a higher low, lower low, and then it should be relatively easy to know what the scoop is. So, waiting once again. SPX, not nearly as strong as the Dow, ending with a little doji star. 14-day ticking down, stochastics up, CCI actually down, RSI sideways, MACD sideways, MACD histogram up. Nowhere near the strength of the Dow, and yeah, it is closer to the previous high already, but needless to say, this should be reacting and moving similar to the Dow, and just not happening today. So to me, warning signal. The NASDAQ. Well, we're really close to the previous high already. But it's not a green day. It's a hammer. It's a possible reversal candle, and yes, it is above the upper price consensus level, which is bullish. Absolutely. 14-day RSI moving average ticking down though. Stochastics on the way up. CCI down. RSI down. Histogram ticking up. MACD sideways. This is very much a wait and see. Everybody's waiting to see this top taken out on all of the indexes, and so that everybody can be given the all clear signal, and nobody wants to jump out in front of it, or else they're going to get hit by a bus. That's to the upside, to the downside, and you can't blame them. Absolutely not. So I have to subscribe to that as well. We have to wait and see. XOY. The market is bullish. Oil is bullish. Vice versa. When oil is bullish, the market is bullish. Oil was not bullish today. It did react to its bottoms and closed near its highs, even though that was still a red position. Did stay above the major price consensus level. It's still below the middle Bollinger Band. We still have the 14-day RSI moving average ticking down. We have the RSI, the CCI, the MACD, and the MACD histogram all ticking down. The only holdout is the fast and slow stochastics. So this going down, which it would appear that it should be, is not good for the market, and we can see on the other indexes that the market looks like it's topped out as people wait for the all clear signal. Ending with a hanging man today, and of course it has to be a hanging man right in the middle of this little range that we have going on, not at the top, not at the bottom. That would have made it too easy, but it is what it is, and the indicators do seem to say there should be more in store, more to the downside in store for oil. Um, the VIX absolutely got creamed today, ending with an inverse hammer. Very ugly in regards to the short-term moving averages getting a crossover to the bearish side, closing below the lower price consensus level again, having the middle Bollinger Band above almost all of the short-term moving averages at this moment, having the hook on the 14-day RSI moving average pointing to the downside, the stochastics pointing down, the CCI, the RSI, bearish cross on the MACD histogram ticking down, absolutely terrible, making a brand new low. It doesn't get too much worse than that, except that, you know, we're so close to the lower Bollinger Band, and we have a possible reversal candle. Beyond that, ugly. There just isn't anything else to say about the stinking VIX. Too bad it wasn't able to hold up here above the previous floor. It's just a really bad situation. It really needs to rebound tomorrow. Get to the $18 mark at the very least. Getting up to 20 psychologically important. That would mean going into the bar. It is not looking great, but I'll keep my fingers crossed. TNA ending with a fat body hammer, possible reversal. 14-day RSI moving average is still ticking down, has a little ways to go before it hits oversold. Hopefully it won't hook over before that time, but everything else is on the way up. CCI up, stochastics up, RSI up, histogram up, MACD up, looking for the bullish cross. There's a lot of reasons to think that the Russell will be going up. We have to have some kind of a major hit in the market to really put a nail in this sucker. Maybe tomorrow with the FOMC will do the trick, but oof, indicators are not looking pretty for the bears with TNA. UUP, not bad, hanging out near the recent highs. 14-day RSI moving average ticking up, stochastics are mixed, CCI ticking down, RSI ticking up, histogram ticking sideways, and the MACD ticking up. Not a bad showing by UUP. Now, with the strength in UUP, the market should be down. It just should be. And I do believe that this is a divergence with the currencies, and at some point it's going to matter. It just isn't mattering right now. Very unusual. FXE, the euro, not a bad day. Green, not really a candle of significance. Could be a fat body spinning top, but the 14-day RSI moving average ticking down, stochastics mixed, up on the CCI, down on the RSI, down on the MACD, and sideways on the MACD histogram. It really needs to go in to challenge this previous low down here at 129.6, and if it's able to break that, which I think is entirely possible, there should be a really decent reaction in the market. Apple making a brand new high once again, 552. Stochastics high, CCI high, RSI high, MACD going sideways pretty high, uptick on the MACD histogram, 14-day RSI moving average staying high, getting a downtick, but no real indication at this moment that it's going to have a correction. We were worried about that when it came down for its downtick. It finished the downtick, and we said we need to wait to see what happens next. Well, this is what's happening next, which is not good for the bears. GE getting a better reading on the Dow, ending with a nice spinning top. We were worried about the 14-day RSI moving average leveling out. It got another downtick today, although the CCI, stochastics, and the MACD and the MACD histogram all ticked up. Spinning top, downtick on the RSI, Hopefully it's going to come back in and wear away at the bar, but it is too early, and it looks like the middle Bollinger Band is trying to get across the short-term moving averages, which would be bullish. So something to consider. GLD, inside day, red spinning top, 14-day RSI moving average ticking down, stochastics up, sideways on the CCI, down on the RSI, slightly up on the MACD histogram, down on the MACD. Very much just staying in this little range here that we're hoping will hold by the time the 14-day RSI gets to the bottom. And notice the 200-day moving average coming up to meet it. Interesting. Also notice that the VIX was down huge today. This is the second VIX. It should have been down bigger based upon fear, if the VIX is truly gauging fear at this moment, which I don't believe that it is. And the dollar was also slightly down today, which should have made this green, which it was not. And so very interesting, both the dollar and fear were not able to move gold up. Makes me wonder if people are selling just because they need the cash. And beyond that, who knows. SLV, same thing, inside day, not a spinning top, just red with a little tail. 14-day ticking down, stochastics up, RSI down, CCI down, MACD histogram actually down, and MACD down. And last but not least, XLF, the financials, ending with a hanging man, a little yin-yang here, which I see from time to time and I think is just funny. Down on the 14-day RSI moving average, stochastic still moving up, CCI, RSI, and moving down, MACD ticking sideways, MACD histogram ticking up. Be very interesting to see if this is going to fail at this previous high and then go down for another bar retest. And that's about it. It is really a holding pattern at the moment. Tomorrow the Fed talks, and we'll probably set in motion whatever the next move is going to be, especially if a tell is given on QE3, whether it's going through, whether it's not, and that is tied with inflation. So that's about it. As always, all investing decisions are your own. This charm video are for entertainment, educational, and consumption of time purposes only. Thank you.